I just spent over £50,000 on one stock. Contrary to all the terrible financial advice on YouTube,
I have a personal plan to time the market in the next 5 years and personally make over $20 million in cold hard cash. I know that sounds crazy, but I'm being 100% serious.
Don't time the market. Cover that what matters more is not timing the market.
You should try and time the market. You can't time the market.
There are definitely ways that you can time the market and make a lot more money.
nobody can time the market. And that was one thing I was stupidly trying to do. If you followed me over the past few months and seen my portfolio updates, you would have seen that I have been sitting on a large amount of cash waiting to deploy that on the best opportunity in the S&P 500. But my consensus is that generally we're in a bear market. I mean, look at this trend. It goes up, goes down, goes up, goes down. But I just think for now, while I'm young, when I can recover from this, I'm going to buy when the price is really, really good. But alas, all the doom and gloom and everyone's saying that the stock market is going to completely crash.
And right now, they are bearish. A majority of millionaire investors say expect the S&P to drop 10% or more next year.
I have made my purchase back into the S&P 500, in which I aim to hold indefinitely or hold until it reaches back to the prices that we saw in January of last year. And why am I making this video? The main reason why I'm making this video is that there would always be advice about selling your stocks or waiting until the best opportunity comes because there's going to be a market crash, because there's going to be a new invention, or whatever the excuse is. There's always going to be a reason to not invest. But as the saying goes, time in the market is better than timing the market.
For me, it's absolutely time in the market, not timing the market. Every time I've tried to time the market, I get it horribly wrong.
I have no doubts that the price I bought at is not the best price and that it will continue to go down. It is not a problem. As I try to teach on my channel, investing is about the long-term generation of wealth, or it's a place to put your money and have it increase hopefully over the inflation rate. It's not something that will make you rich. If you want to become rich, you need to find a way of generating lots of money in a short amount of time. That is basically the definition of rich. However, if you're looking for a place to put your money that doesn't depreciate as quickly as a savings account or just putting it in the bank, then investing is the right thing for you. So the other question is, why the S&P 500? What is my thought process behind investing so much into the S&P 500 instead of maybe looking at a lot of new strategies that have come out, dividend investing and things like that? I first and foremost believe that index funds are the safest way to invest, especially the S&P 500, which is a collection of around the top 500 companies in the US. And why exactly am I focusing on the US instead of looking at a global diversified ETF? Well, the main reason is that the US holds the dollar, which is the world reserve currency, and that gives it a specific strength across the world because whenever money is exchanged, it usually goes into dollar first. Whenever oil is bought, it goes into dollars first and then converts into the local currency. This means that the US has a stranglehold over pretty much all the supply in the world, meaning that the US is the #1 economy to look out for. It is a global superpower, and as long as they are the superpower, every country in the world would want to hold some sort of dollar reserve, meaning that there is some backing to the US economy. Furthermore, the top 500 companies in the US also have the operations all across the world. For example, Apple has operations all across the world. They have factories all across the world. They sell iPhones literally everywhere. Amazon also has creeped their way up into nearly every single household in the whole world. These companies are likely to continue to keep developing, especially because the S&P 500 is very technology heavy. And another reason why the S&P 500 is because we've seen a large decrease in their valuation, so over a 20% year-to-date decline, meaning that it is a great opportunity to buy now because coming out of the recession, these companies are very likely to be at the forefront of innovation and what actually is the driving force behind bringing us out of the recession. Going forward, I'm going to continue to keep buying more shares in the S&P 500. And if you're thinking about buying shares in the S&P 500, it is important to know that there are a lot of providers that offer the S&P 500. So the main one being Vanguard. So the Vanguard S&P 500, ticker symbol VUSA, is probably the most common. I have in fact gone for the iShares version, which is a hedged version, which means that the currency difference between the dollar and the pound are kind of equalized. That being said, it is more expensive because it has a higher total expense ratio and they hedging is never going to be perfect. Although this video is not financial advice, I'm not telling you to invest into the S&P 500. What I want to say instead is to stop listening to other people, stop listening to people on YouTube who are saying that there's going to be a crash, or if they say that the time to invest now is the wrong time. Looking back 30 years from now, you would realize that there literally was not a perfect time to start investing. There would not have been a wrong time and a right time to start investing, as long as you stay invested into the market. Buy it as regularly as possible, especially when the price becomes more attractive to you. That being said, make sure to check out some of my other videos, and I will see you in the next video.